So yesterday was a wave of red. Reality is finally catching up. It has been less than 2 months, but it seems the ground beneath the economy is starting to give way. Now, when Trump took office, he promised to reverse the decline of the US economy, that the golden age of America is officially here. And throughout the tariff war, we have been hearing the same rhetoric from the administration, from the Treasury all the way to the Commerce Department. Everyone was convinced that Trump's policies were going to save the US economy.
The Trump administration and this president cares about Americans, and you're going to feel it change. You're going to feel the price of energy coming down. You're going to feel prices coming down. You're going to feel an explosion. The golden age of manufacturing of America has always been there. It's just been stifled by regulation, and that time is over.
Well, they might have convinced themselves, but the state of the economy isn't strong at all. While Biden left Trump with a time bomb, his new policies just put a nail in the coffin. GDP estimates from the Fed itself shows an economy that isn't just stagnating, but is in severe contraction. US GDP is expected to crash by 2.8% in Q1, falling further from the previous estimate of minus 1.5%. In addition, other indicators are also flashing red. The US dollar is tumbling, highlighting a decrease in demand for the reserve currency. The safe haven trade is failing because everyone is concerned about a US recession. Now, Trump has managed to ram uncertainty so high that he alone is starting to break global markets. And when you decide to impose tariffs on Monday, you remove them on Tuesday and then reimpose them on Friday, it creates chaos. It's impossible for companies and people to really make decisions. Looking at the bond market, we are seeing a big warning signal of yields collapsing. Even though inflation is still high in the US, the market is predicting that the Federal Reserve will have to slash rates. By the end of Q2, there's an 85% chance of rate cuts happening, 54% odds of a single cut, but a 29% chance of a jumbo 50-point cut. Cutting rates during a tariff war is very counterintuitive, especially when we all know consumers pay the tax. Inflation is going to head up, and the only reason why you would be cutting is because the economy is at risk of collapse or is already falling apart. The problem lies with Trump clamping down on the real driver of growth. Now, 70% of the economy comes from consumption, but people are already starting to spend less. They're starting to feel the squeeze from high interest rates that just aren't coming down. Take US mortgage rates for example. Over the past 3 years, it has stayed well over 6%, almost 3 times higher than the pandemic levels. Together with higher credit card interest and car loans, US consumers they have no room for any additional spending. People's paychecks are going mainly to mortgage payments, car payments, utilities, and groceries. There's simply no room left for any discretionary spending. And to make things worse, the US is going to reduce government spending in a big way. This is being done with Doge cutting away a ton of federal jobs that could leave up to 500,000 people out of work. And when you don't have a job, you have no income. And without any income, you have to do brutal cutbacks on your spending. Scott Bessent of the US Treasury has gone on the record saying the US economy will be shifting away from public spending. And here's what he said: "We have become addicted to this government spending, and there's going to be a detox period." In other words, the US economy is headed towards a painful period of withdrawal. In 2024, US GDP grew by 2.8%, which is a decent rate for an advanced economy. But this was driven by deficit spending of 6.7% of national GDP. If you reduce government spending enough, you will plunge the US economy into recession. Now, sentiment is already very weak, especially with Trump's upcoming trade war with Canada and Mexico in April. A 20% additional tariff has already been applied to Chinese goods, so people are already paying more in Walmart. Now, this chart shows us how bad the rug pull can get. Real GDP in blue in the US has largely been positive, but since 2008, growth has been largely fueled by federal debt. If we minus the debt increase, US GDP would have been negative a long time ago. In Q4, this would have been a negative 2.2% print. Trying to move away from government spending to private consumption is definitely a good move for the long run. It's more sustainable. But the US economy has been propped up for so long that this detox might send the entire house of cards collapsing down. Now, in an interview, Trump also confirmed that the economy would be headed into the danger zone. He was really evasive and didn't really spell out the word recession, but it's mighty obvious things are not looking good today.
Let me stay on the economy for a moment because there are rising worries about a slowdown. You've got the Atlanta Federal Reserve saying we're going to have a contraction in the first quarter. Look, I know that you inherited a mess, and you said that the other night.
I've only been here,
but are you expecting a recession this year?
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time. But I think it should be great for us. I mean, I think it should be great.
Trump just can't come out and say the US is collapsing. Just like any other president, he is in damage control mode. His tariff policies are turning the world against US goods. And at the same time, he's relentless in cutting away federal jobs. And both of this will hurt the earnings of companies. And we can see this urgency and fear being reflected directly in the US stock market. Now, as we speak, on Monday, the S&P fell by 1.5% and the Nasdaq crashing by nearly 2% in a single day. Money is also flowing into the bond market with treasury yields on a 10-year dropping by 7 basis points, down to 4.2%. In less than a month, the US stock market has dropped by 7%, and by now is probably 8 or 10% down, which signals collapsing confidence in the economy. The market is forward-looking and it paints a bleak picture of US growth. At the end of the day, everything is judged on company earnings. And when you pull away federal deficits, you raise tariffs and you wage a global trade war, it adds enormous pressure on this highly leveraged economy. Now, just one of this could trigger a storm for US companies. Domestic consumers buy less, foreign countries also stop importing US goods. It's not that hard to understand. Now, take China's retaliation on Trump's economy, for example. In response to the tariff war, Beijing is hitting back with their own set of tariffs. They have imposed big import taxes on US farm products including chicken, wheat, corn, and soybeans. This is an industry whose margins are razor thin, and now $21 billion in US exports will be hit. A tariff war would decimate farmers and trigger a whole host of rollover effects. Profits will slump, farms could close, and unemployment would rise. This is bad for the overall economy. The problem we face today is an endless loop of trade escalations without understanding that there are real jobs on the line. The unemployment rate might be steady at 4% today, but a trade war could flip the situation on its head. In 2023, the US exported nearly $150 billion worth of goods to China, and that accounts for over 900,000 jobs in the United States, nearly a million. If China continues to impose tariffs or decides to simply cut away these imports, many jobs could evaporate. This applies to other major economies that Trump plans to punish as well: Mexico, Canada, and the European Union. Now, while each of them have smaller consumer markets, collectively, they can hurt US exports to a large degree. So what would it take for Trump to reverse the collapse? Is there still time to avoid a US recession? Now, the definition of a recession is 2 quarters of negative GDP. It's probably hopeless to reverse the figures for Q1. Importers are already bringing in loads of foreign products to front-run the tariffs, and that counts against GDP. So a contraction is baked into the cake. But to restore economic growth in Q2, Trump will have to reverse his tariffs, and here's why. As a result of Trump's trade war on China, Mexico, and Canada, US household budgets will get hit. The price of everything from groceries to a new car would rise. Middle-class families could see an extra burden of $1,200 a year thanks to Trump's tariffs. It gets even worse as we move down the ladder. The poorest Americans could face higher bills that raise their cost of living by nearly 3%. By stopping the global trade war, Trump will help to ease the burden of local American families. It would help private consumption recover and really grease the wheels of commerce. But that would also mean admitting that tariffs raise inflation, that reshoring industries doesn't mean lower prices, but in fact higher prices. And that would be the ultimate challenge because the Trump White House, they are drinking their own Kool-Aid.
Do you think by moving everything back as you describe it that they're going to be able to be competitive globally? Aren't prices ultimately going to actually have to rise?
I think if you want to buy things from other countries and you want to bring it into America, then the price is going to rise. But if you make it here, then of course the price won't rise. So make it here. Make it here. How hard is that to say? You know, just keep repeating it to yourself. There's no tariff if you make it here. So TSMC, the biggest chip manufacturer, says, okay, I'll make it here. You're going to watch everybody come to that realization. Apple, who builds it all in China. Why are they building it all in China and giving us our iPhone? Why don't they make it here? You know,
well,
they used to say...
One answer, Mr. Secretary, is that wages are lower over there.
And now there are robots who can do it. You're going to see robotic production of iPhones and the jobs that are going to be created. People who build those factories, the mechanics who work on those robots. These jobs are going to be millions and millions of those jobs. These are great, high-paying jobs, and you don't need a college education to do it. This is the recreation of tradecraft in the United States of America, and Donald Trump is on it. He's bringing it back, and you are going to see Apple. Why did Apple say they're going to invest $500 billion in America? Because they're going to build the robots to build their iPhones in America.
Now, could they reverse this line of thinking? Maybe, but I wouldn't hold my breath. This is like an episode of The Twilight Zone. Trump's team is 100% convinced that reshoring industries will not raise prices. All we need are robots from the future and nuclear fusion technology. And that's the level of thinking we have in the Commerce Department of the United States. And when you ask Scott Bessent, he is also convinced that tariffs won't raise US inflation, that China will eat the increase in tariffs. He is betting that Chinese suppliers are desperate enough to sell into the US market, and he better be right. If China manages to raise domestic consumption, or simply shift exports elsewhere, his plan will collapse. It will be US consumers that ultimately eat the tariffs. Now, over the past few months, we have seen the US trying to convince Mexico and Canada to match their tariffs on China. The grand plan would be to create a Fortress America bloc to block Chinese exports to the entire North American market. So tariffs are just part of the greater playbook of containing China's economy. But Beijing is not going to roll over and give up without a fight. In 2025, China is going to launch the mother of all stimulus to combat US tariffs. They will ramp up the broad deficit to nearly 10% of GDP and issue 1.3 trillion RMB worth of ultra-long sovereign bonds. China's ultimate weapon isn't to launch endless counter-tariffs on the US. It's simply to build up a more resilient and a stronger domestic economy. That way, the demand for US products would ultimately fall, cutting away precious revenue for American companies. Trump's trade war is only going to have the opposite effect on China. And just like the semiconductor curbs, it will backfire. So be prepared for more economic shocks. And if you are in the markets, well, this is going to be a really wild ride ahead. Things will never be the same again. But let me know what you think. Is a US recession coming? And will Trump ever reverse this trade war? Let me know in the comments below. Stay safe. Be sure to smash the like button and subscribe as we navigate through these crazy times.